Guys, welcome back to my YouTube channel. It's your boy FX Dollar Marine. So today basically I'll be talking on basic market structure. Like I promised before that I would do a breakdown of my trading strategy, the algo structure. But before I could get into that, I'll be doing a series of video from the beginning to the whole strategy coming together. So on today's episode of this video, I'll be talking on just the basic market structure because the importance of market structure in the markets cannot be overemphasized. It's very important. It's the fundamentals. So basically, what is market structure, guys? Yeah, market structure is a simple and a basic form of understanding of how the markets move. It's as simple as that. It's just a basic form of understanding how the market moves. Now, most people tend to confuse market structure with price action, but price action is how the market moves based on just price only, without consideration of trends and how they may continue. But the market structure is focused mainly on the trend. So the basic market structure is focused mainly on the trend. And there are three types of market structure, the basic market structure. There is the uptrend. For those of you who are still new in the game, there is the uptrend, there is the downtrend, and there is consolidation or ranging markets like I have listed out, or ranging market. So as we go ahead, I will still show you chart examples. But first of all, let me draw out the basic form. So let's start with the uptrend. Now, first of all, what is the uptrend? An uptrend refers to the overall upward movement in the exchange rate of a currency pair over a specific period of time. So uptrend is another way of saying bullish trend. You're buying. Once you get that, you know you're buying. So this is actually the basic way it looks like. So buy, retraces, break of structure, buy, retraces, break of structure, buy, retraces, break of structure, buy, retraces. Basically, so this is the basic form of an uptrend where this is actually your BOS, your break of structure. This is your BOS. So your breaking structure to the upside. This is how the uptrend looks like. Now for the downtrend, I could just flip this. Let me flip this. Let me just draw that one. Let me draw that one. So basically, that is the uptrend. Then this is your downtrend. So sell, retrace, sell, retrace, sell, retrace, and so on and so forth. That's the way it continues, guys. So you can see the basic difference between both of them. It's one is buying, the bullish is like a staircase upwards, and then the bearish is like a staircase downwards. Now then the last one, which is the consolidation. From the word ranging, I'm sure most of you should actually have gotten the idea what that is. So it's basically the market is not breaking structure anywhere, it's just ranging between a particular point, up and down, up and down, like that. So this is basically the ranging market where the market does not break above, it's just ranging between the up, let me use the word, between the resistance and then demand. You see it, guys? So it's just ranging in between. Now that is your ranging or your consolidation market. So those are the three basic type of structure we have before we go into the advanced type of structure where we will talk about the swing structure, substructure, and then the minor structure. So before I go into that in the next video, let me quickly show you chart example of an uptrend, a downtrend, and then a ranging market, guys. So quickly, let's head over to the charts. Okay, so as you can see right here, this is an uptrend. This is a bullish market. Why? Let me draw it out so you guys, as you can see, this is, let me start from here: higher low, higher high, higher low, higher high, higher low, and then higher high. So as you can see, this is bullish, guys. This is what an example of a bullish trend. And then your common sense will tell you when you're in a bullish market, you're meant to buy. I don't see why you should be trying to sell when the structure is bearish, right? When the structure is bullish. So the trend is your friend, like they always say. As you can see, the 3 trades I've taken on this pair are buys, and so far so good. They are playing out well. This last one is still playing out. So let's go and then let's look for example of a bearish trend. Let's look for example of a bearish trend. Okay, let's use UNZD. Okay, UNZD. No, it's bullish. Let me check GPBNs, and I think this is bullish too. Bullish also. Okay, yes. As you can see now, this is USCHF. This one will be ambiguous. Let's look for another pair. I'm looking for a more pair with a clearer bearish structure, guys. It's a clearer bearish structure. Okay. No. Let's check this GBP USD. Okay. I think I found what I'm looking for. AG card. As you can see, guys, yes. As you can see, although this is the daily time frame, but just for explanation purposes. So let's use the internal structure right here. So let's use here to here, guys. So as you can see, this is lower high, lower low, lower high, lower low, lower high, lower low. Wait, hold on, guys. This is supposed to be the lower low. Yeah, let's get it and continue. Lower high, lower low, lower high, lower low, and then price broke structure. Now when the trend is changing, when it breaks, because normally on the downtrend the structure is not supposed to break above the lower high, right? But then when it happens, it means the structure is shifting to become bearish. Now that is what you call your change of character. You must have heard the word, or you must have seen the short form CHOCH, CHOCH. Yes, that's the meaning. So as you can see right here, price shifted and became bullish, guys. So last example, let's look for a ranging market. Which market was currently ranging? Let's find, guys. I really don't know why my chat is slow today, but nevertheless, Okay, so there's no range in here. Hmm. Okay, takes a clean example of a ranging market right here. Just this inner structure here. So as you can see, price right here, what's in between. So just going up, down, up, down, up, down, up, down. Now, okay, now it has broken through and it's telling us it's going to the downside. For those people who have the strategy that works in a ranging market, they could actually use it here. So basically, that's it, guys. That's the basic market structure explained. Watch the next video for the advanced market structure where we'll talk about the minor structure, substructure, and the swing structure. And then before we go ahead to my algo market structure, which I use for my trading, guys. Thanks for watching, guys. Hit that subscribe button, comment, guys. It goes a long way. Thank you guys for watching. Bye.